After the perfect storm of the pandemic, the tide is turning in favour of investment into UK retail property assets. In 2021, transaction volumes in the sector reached more than £7.4 billion, a 69% year-on-year increase. And at £1.7 billion, investment in the first quarter of this year remained above the 5-year quarterly average.
Improved confidence amongst retailers, the continued strong performance of retail warehouses, and the prospects for a dramatically repriced shopping centre sector have all contributed to a much more positive attitude towards retail assets. In recent months, sentiment towards UK shopping centres and outlets has been the most positive we have witnessed for several years. For grocery-backed assets, we continue to see concerted demand throughout 2021 and transaction volumes hit £1.8 billion. As a thinning supply of stock and hardening yields has led to some investors now looking elsewhere for opportunities.
After a quiet start to 2021, retail warehouse investment gained huge momentum during the year. Returns hit 21% for the year, with 8% of that generated in Q4 alone.
As the year progressed, it was clear that investors thought that yields had moved out too far, and the arbitrage between retail warehouses and industrial assets, which are structurally similar property, was too great. Retail parks have not suffered the same levels of default, vacancy and falling rents as in-town retail, and some investors are buying these out-of-town assets because they see their potential for last-mile logistics.
There has been growing cautious optimism in the shopping centres sector, and transaction volumes have gradually returned to historically higher levels.
In 2021, 74 shopping centres traded for a total of £1.5 billion. This is the highest level since 2017, whilst we are also witnessing the return of larger shopping centre deals. Notable transactions include Arden acquiring the Touchwood in Solihull for £90 million, Eurofund and Henderson Park's acquisition of Silverburn in Glasgow for £140 million, and Redical Holdings' recent acquisition of the Liberty Centre in Romford for £80 million. Interestingly, around 45% of all shopping centre transactions in 2021 were concluded by new entrants to the sector, and we anticipate many of these investors will continue to seek further opportunities throughout the year ahead. The first 3 months of this year also saw £340 million of assets traded, a 38% increase on the corresponding quarter last year. A further £480 million of shopping centres are currently under offer, which suggests that the current economic headwinds have not stifled activity to date.
Even prior to the pandemic, there had been a significant decline in demand from investors for high street investment opportunities. But recently, confidence and investor demand has improved.
Assets with income from convenience retailers tend to be more sought after than those occupied by fashion brands. We suspect this trend will continue as increases in inflation and the cost of living mean a collective tightening of the consumer belt and lower demand for non-essential goods. However, with working from home for at least a proportion of the week becoming the norm for millions, there's a noticeable increased demand for high street assets which serve a local catchment.
There are some positive indications across the retail capital markets as retailing reboots itself off the back of rebased rents and more versatile and resilient occupiers. Obviously, with the current world situation and economic pressures, there are still some challenging times ahead. But for the present, it would seem that the worst of the storm for retail has now passed.